Hello, everyone, and welcome to the 31st episode of the Shivnadar Foundation Conversations. My name is Sundar Mahalingam, and I'm the Chief Strategy Officer of HCL Corporation and the Shivnadar Foundation. These conversations is something that we started in April to inject some level of positivity into our lives and create some ripples of inspiration for people, our students, our alumni, and other people beyond as well. And in the series, in the last 31 or 30 episodes that we have done, we have hosted leaders from diverse fields who have shared their life lessons with us. People like Kailash Satyarthi, PV Sindhu, Dipinder Goyal of Zomato, the manager of the Manchester United Football Club, Ole Gunnar, prize-winning author William Dalrymple, etc., etc. So it's been a very, very interesting, and we really enjoyed doing this as we move forward. And thus far, about 24 million people have seen this. So we hope you'll enjoy this as we go forward. And today we have very interesting guests. We have two people today who I have the privilege to talk to, who are disrupting the Indian financial service industry. Just one app at a time. So please welcome Nithin and Nikhil Kamath, brothers and co-founders of the stockbroking company Zerodha. So.
Thanks, Sundar, for having us.
Nikhil, Nithin, it's an absolute privilege and honor to be talking to you. Thank you so much for spending time with us and our viewers. As I mentioned, students, alumni, professors, a huge range of people. And just for the audience, Zerodha is a discount stockbroking company that was started in 2010, not very long ago. But today is the largest stockbroking company in India. And it processes over 5 million trades every day for over 30 lakh clients. So it's huge, though while you can see two young people looking at you and no prizes for guessing who's younger, who's older. But it's a wonderful, wonderful story. And I'm very excited to hear it from the horse's mouth as to how this happened and what the journey has been thus far and what the journey is going to be going forward, right? And Zerodha has not taken any external funds. The funding is completely internal thus far. So that's something remarkable about this organization. And before we move forward, I'd love to congratulate both of them for being awarded the ET Startup of the Year 2020 this year. It must be a wonderful feeling. Congrats, guys.
Thanks.
So now let me just start from the beginning. Question number one. So again, this is, as I said, I'd like to trace the journey. So I understand both of you started trading in a sense, and from the beginning, Nikhil first and Nithin. So how did the aptitude and affinity start in that sense, and how did it happen? And take us through the journey of trading and how you started it and what happened, and where did you come, and what things played a role in the trading aspect? You're from fairly, I think, middle class background in that sense. So how did all this happen? So we'd love to hear from the two of you as far as this point.
Yeah. No, I mean, the thing is, I'm 7 years elder, so I've kind of been almost like a father figure for everybody.
Totally. Only age is more, but maturity is more here.
Yeah, no, but jokes apart, I started trading quite early, and I think I got influenced because we used to live in a neighborhood of people who used to trade the markets, and Nikhil is 7 years younger. So he actually picked it up even before me, because by the time I was trading, he had anyways seen me trade and etc. So it was obvious. And so this was, I started trading, late 90s, early 2000. I think Nikhil, by the time he was 16, he was trading already. And
Wow.
And then during the journey, we used to pay a lot of brokerage to the main stockbroker. So we decided to become a sub-broker, like a franchisee of a bigger brokerage firm back in 2005. Along this journey, we both have gone bust multiple times. Coincidentally, both of us worked in the call centers for a while. I worked for 4 years, he worked for 3 years. So when you lost money, you're trying to put money back on the, like trading capital back. So, and I think call center was a good place because you could work in the nights, trade during daytime, and all of that, right? And then we started this thing called as Kamath Associates, which was like a portfolio advisory business in 2006. And then in 2008, we made some money when the markets fell, etc. And by that time, I think evolution or whatever, we realized that he's a better trader than I am, and it didn't make sense for both of us to sit and trade. So the idea was then is that can you build a better brokerage firm for very active traders like us? And so we said, no, why don't let me give a shot at building like a retail piece, and why don't you give a shot at continuing the trading piece and managing risk and all of that. So and that's how Zerodha started. It started in 2010. It was not meant to be what it is today. It was all when it started. It was really meant to be. Like people who like rock music go set up a pub and invite their friends who like rock music. It was something like that. It was supposed to be very niche, and it was just meant to be for very active traders. And then it took many directions, but the journey is that that's how Zerodha as a business started off.
Right. Yeah. Just one quick question before we come to Zerodha on this one. So tell us, and we were discussing this, right? So a lot of young people are not very clear about the stock market. There are lots of impressions. It's a place to make money. It's a place where you gamble. All these. So tell the audience a little bit about what is trading all about, and why is it is it art, is it science, what is it exactly? Give us some sense of it.
I think it's a little bit of everything. I don't know if it's so much about art as much as it might be about having a bunch of rules and working within that system. I think when it comes down to it, it's a lot about how disciplined you are and how reasonable your expectations are, much more than gambling or art, which could be involved in it. I think you have to stick by the rules you set for yourself, whatever they may be, and you have to kind of stick by them, immaterial of what the market throws at you. Yeah.
I think just to add, right? A lot of people look at stock market as gambling. Okay. I think the reason for that is the results are instant, right? Which is you don't do like Nikhil said, you break your rule, you get to know your profit and loss immediately, right? In other walks of life, for example, both of us were horrible at school. Okay, as in we were probably the worst in school through our school, and. But that is also gambling. If you're going to a school and you're not studying well, you're actually gambling with your life. It's just that your results are delayed. You get to know after 20 years what was the result of not studying well in school, right? But stock markets, everything is black and white. You get to know immediately if you did something right or you didn't do something wrong. So and that makes it all seems like a gamble. Otherwise, everything you're doing in life in a way is a gamble. You're marrying, you're going to college, you're picking yours. What branch of engineering you're going to do or whatever, right? So I know a lot of people call it gambling. I think you can gamble with everything in life. You can also gamble in stock markets, or like Nikhil said, you can follow a process and hope to do okay.
I think one of the issues is people come into the stock market with unreasonable expectations. If you walk into the markets trying to double your money in a year or make some ridiculous yield number like that, then you have to kind of gamble to have an opportunity of achieving that. But if you walk into the markets and you want to make 15% a year, which compounded over many years is significant amounts of money, I think your expectations, when they bear down based on what yield you want, everything else falls in place along with it.
Wonderful.
And to add, right, as in you need luck in life. Okay, like Nikhil's done 50% compounded over the last 10, 12 years, not 15.50. Right? It's just ridiculous kind of a return. And but you're not starting a year saying I want to do 50, right? You're saying, I want to be conservative with my risk, and I want to do this. And then if things play along, you might do 50% compounded a year, but you can't. If you plan for 50, you invariably end up becoming too aggressive. And the more times you walk on the tightrope, the higher the chances of falling off. And I think if someone's starting trading the markets or planning to trade, I think you need to be as conservative as possible, and that's really the key.
So you're giving me very counter, what I call intuitive advice. Stock market is being more conservative than what I call being a risk taker. In a sense, is the sense I'm getting. Quick question again in this one. So you talked about rules. So, and do these rules change? Do you keep playing or tweaking the rules, or do they are what I call something like Newton's laws or something of that sort?
Structurally, the rules I think largely remain the same. Market conditions change, and what trading system might work at what time might change. But things like you have enough diversification in your portfolio. You don't trade on borrowed money. You don't lever up too much. You're able to curtail losses at a certain point. I think these remain common. The systems you might implement can change from time to time.
Right. Thank you. So now coming to Zerodha. So then you started Zerodha, like as you mentioned, almost like a family, and so let's do it together, sort of thing. So take us through the journey a little bit from that there on to, let's say, next 5-7 years, when you sort of started slowly becoming bigger and bigger and bigger.
Yeah, no, I mean, so see, when we started the first 2 years, we actually ran on his trading profits, right? As in, because there was, we just scraped enough money to just get this rolling, right? And I think one of the biggest enablers for this to happen was when we started in 2010, the exchange in India, NSE, was offering a free trading platform for all its members. So we didn't really have to spend money on technology, right? So it was kind of you took off the shelf product and you just packaged it differently. We came in and said we are the lowest costing brokers in the country. We used to we charge a flat fee per trade. We are extremely transparent. We are we started blogging from day one. Because what you see is typically in financial services firms, they're typically very opaque in the way they work, right? And that's the reason for being opaque, is because every customer gets a different deal, right? So you can't really come and talk about it in the open. So we said we're going to offer the same deal to everyone, which means that we can be transparent. We can come in, and I can come and tell you how much is our account opening fees, because every customer of ours has paid the same account opening fees or same brokerage or whatever, right? So that way, we don't have to hide anything, and which meant that for the first time in the country, there was this broker who was actually coming out in the open and talking about it, everything that they have to offer. So transparency and low cost were essentially the edge when we started. But in the business of money, credibility is very important, right? And as soon as you say low cost, people associate low quality, or what is a catch? Will you run away with my money and all of that, right? So that was a really big challenge. I think one of those things that helped us was I was especially very active in this whole online trading world. Very active on a lot of communities, and I had like large Orkut communities and all of that at that time. So it was easy to kind of plug Zerodha into a bunch of these places. But I think for us, the tipping point was in 2013 when Kailash, who heads our tech, joined us. He doesn't like to be called a co-founder, but he's as co-founder as we are to this business. Because by 2012, what happened was the first competitor came around and who said the same story that we were saying, which is low cost, flat fees, transparent, and etc. And then we realized that there is no edge to the business because this can easily be replicated, and we knew that the real edge to be built here is actually in terms of the product and not really just a marketing pitch, because that anyone can cut, copy, paste and do it. So once Kailash joined, the whole product journey started, right? And he's probably the best technologist I've ever met in my life, and like a monster he is. So 2015 is when we launched our in-house product, which is called Kite, which is our web and mobile trading platform, and took a completely different approach to trading platforms, minimalistic, clutter-free, yet very powerful. And in 2015, we did another very instinctive kind of things, which was we went zero brokerage for equity investing. What was happening by 2015 was that we were getting labeled as a trader. Only if you're a very active day trader or a futures and options trader, use Zerodha. Otherwise, go use ICICI, HDFC, whatever, right? And we realized that the active trading community in the country is maybe not more than 5 lakhs, right? And so we had to now grow the audience, right? As in now we had realized that there is really a business opportunity. This is not just for like this small pub where just a few folks can go visit and enjoy. We realized that there is a real business opportunity. And we said, how do we change that image for the business? And we decided to go zero brokerage. We said, maybe changing this image, going zero brokerage for equity investing can change the image of the business, make it more attractive for people who do investing. And the investing audience is almost like 8 to 10 million Indians in India, right? So almost like a 15, 20 of the active trading population. And that going zero brokerage along with our in-house product gave us virality for the first time. Right, 2015 end, we were at around 60,000 customers. We are, like I said, we are almost 3.5 million now.
Wow.
So that journey, happened really quickly from 2016 onwards. And one big enabler here was also Aadhaar and demonetization. Why? Because until 2016, onboarding a customer was almost like a 15-day process, 40-page document. I don't know how many signatures, how many proofs, right? And there was, it was extremely complex to onboard a customer. Demonetization meant that people started using Aadhaar for the use cases for KYC, e-sign, and all of that. And once onboarding was instant, like that, typically, right, if you look at financial services firms in India, banks, brokers, NBFCs, historically, the ones who have done bigger are the ones who have the most physical presence, right? State Bank of India is whatever it is because it's got the most number of branches, right? Or HDFC is what it is because of their branch presence, right? But the reason was because of onboarding. More branches you have, more accounts you open, right? But this whole online onboarding suddenly meant that traditional folks lost that moat that they had, right? Now, a better product can onboard customers quickly, can actually win this kind of a battle versus, which was earlier, which was how many physical presence you have, which used to matter. So that's that thing happened in 2016, which helped us significantly. Yeah. So two really big tipping points, as I said, one is getting Kailash to join and build tech for us, and second was Aadhaar, which actually defined this whole journey for us as a business.
Yeah. Thank you. It's lovely. So I'm going to again get back into the technology part. So as you mentioned that Kailash came in and that made a big difference. So just some sense of how did technology make a difference? While yes, we all understand, and as HCL and Shiva Foundation, we understand the power of technology. But I'm just wondering as to, so what is it that you offered that made it, your journey is remarkable. So if you have any insights, any points to offer.
No, I mean, see, this question keeps coming. They ask me, they keep asking what is so different about Zerodha compared to someone else, right? I mean, like the question I usually I have a counter question for this. I say, why do you use Google versus Yahoo, right? I mean, like if you can, the search engine is essentially, both are search engines, right? As in, why do you use Google over Yahoo? I mean, it's essentially, if you have the answer for that question, you have the answer for this question, because otherwise it's very tough to explain what a better product means. Right? Because the functionality-wise, everything is the same. Every trading platform has a buy-sell window, a bunch of stock prices ticking, and a bunch of features, utilities, and all of that. But I think how you put it all together, how simple it is. Actually, making products which are simple is a lot more complex than complicating a product, right? And the simplicity of Google is what makes it win over Yahoo, right? That's essentially what I think Kailash and the tech team have been able to manage to do at Zerodha, which is, the thing is, the challenge for us as Zerodha was that when we were simplifying the product, right, our bread, butter, jam, as a business comes from very active traders, people who trade the markets. And people who trade the markets are almost like, car racing enthusiasts, right? I mean, they care about all these features, all these different kind of buttons and all of that, right? So you had to care for them while also the fact that 90% of our customers are almost first time to the markets, right? So you had to kind of build a product which is simple, it offers everything that really, whatever car racing aficionado needs, right? So combining this is what our team has done really well.
No, but that's remarkably difficult, isn't it? I mean, having what I call the simple or vanilla car, and then having all this thing in the same platform. I mean, you may say it sounds simple, but I mean, as a person who's
sorry, just
we have one more guest in our show. Yeah, but that's a lovely thought as well. That's a lovely answer. Thank you, because what you're saying is essentially you manage to make the platform talk to both the what I call the enthusiast and the first time user at the same time without sacrificing either. So that seems to be that's a big what I call, to my mind, a big thing in itself, right?
No, and I think other thing we did around tech is that when we were building our web and mobile platform, the Kite platform, the way the team built it was is that anyone else can come build on top of it. So we launched this thing called Skype Connect APIs before we actually built our trading platform, right? So what it meant is that this APIs could be used by anyone else to build any trading platform, and so we started this initiative called Rain Matter, which is like a incubator fund where we started inviting startups to come help build the capital market ecosystem in the country, right? The big challenge in India, the real problem to solve in India is not really to build another trading platform. It is really that only 8 or 9 million Indians invest in the capital markets every year, and that audience has to grow. The reason that audience has to grow is because entrepreneurs should be able to raise easy money locally and not just rely on VCs and Ps all the time, right? And for that problem to solve, you need to build niche user experiences. You need like a WhatsApp moment, Uber moment of sorts. And that can happen only when there are startups innovating. So what we did was we opened these APIs and we invited startups and said, we will take care of the big problem in the business of money is compliance, regulation, and all of that, right? All those dirty work. So we said, we've already taken care of that dirty work. Don't worry about it. Why don't you come think of building this niche experience on top of us, right? And the other problem with in the business of money, which I said earlier, was credibility, right? So people don't trust a product really quickly. I mean, you will go to dogfood.com and buy dog food for 1,000 rupees, but you won't go to saveformylife.com and save 500 rupees unless you know that saveformylife.com is going to survive 10, 20 years, right? As in, you don't trust a platform with money because that platform is now a custodian of your asset, right? So now that trust is an important aspect of this. So what we told the startups is that, we will give you that initial audience to validate your product, right? For anyone starting up, the big challenge is to get to your first 10,000 customers, who will say if your product is good, bad, ugly, whatever, right? So we said, we will put you in front of an audience, which was our audience, and our audience was one of those kinds who always, from the time we started the business, always encouraged every new initiative of ours. And so, they've all used these products, these companies, and some of these startups who come built on top of us are on their own very successful today. They've done really, really well. So, which is, like, personally for me in this journey, I think one of those really exciting things is the fact that we've somehow been enablers for all these businesses to kind of build on top of us. And today, yeah, so, there's a whole ecosystem of those startups. It's almost like, Android and Play Store. Right, as in, all these apps that people get just by opening an account with us.
Mm-hmm. No, that's fabulous. Okay, interesting. So yeah, I mean, and in fact, we should come back to that later about the bigger problem of getting more involvement of capital markets, of people in the capital markets of the organization in the country. But just coming to this, I also understand. I'm just moving track here slightly. That you do not, you haven't been, while you've a lot of word of mouth, a lot of blogs and all that, but you haven't really gone and done much what I call advertising or that things of that sort. In spite, and yet been having, we've been able to build such a large what I call audience and such a large customer base. So, is there a method to this, or how did you sort of make this happen?
Yeah. No, I mean, see, the thing is, like I said before, right, in this business of money, right, like we've been traders, and I think I've interacted with, I don't know, like a zillion traders. I was very active even before Zerodha, and what I think the realization always was that people don't open a trading and demat account looking at a marketing and advertisement ad, right? Usually, I started trading because my friend introduced me to it, or Nikhil started trading because I introduced him to it, or you pick up anyone around you, right? And if you ask them, why did you start trading and investing? They will say, this person introduced me to it, right? No one really picked up a newspaper or looked up a YouTube ad and decided to suddenly start trading and investing. It doesn't work like that, right? And the realization was that, if people don't really look at it, and why even bother spending on it, right? If people, if people open trading and demat accounts only when they are told by a friend or family or whatever, we need to find a way to tap into that. And that's a lot more challenging. Throwing money on marketing and advertising is probably the simplest thing you can do in life to acquire customers, right? But to get that word of mouth going, it means that you need to get customer love, right? And so every single initiative, every single thing that we do as a business has always been focusing on, will it help our customer or not, right? And even before it helps our business, we never build anything thinking of revenues. It's, revenue is all, for us has always been in this journey like a byproduct. So we've always said, is it the right thing for the customer? And if it is, we will do it. And I think, all of that effort that we took for many, many years, started kind of playing out in the last. A lot of people think Zerodha is 10 years old. I mean, a lot of people think we're just 3-4 years old because we became popular in the last 3-4 years. But it's actually a 20-year-old business, because the day, I started trading, I think Zerodha as a business started growing, because from then, this whole sharing with the community, sharing knowledge, just talking about markets, saying what's the right thing to do without having any kind of a conflict of interest or without any vested kind of, any expectations, right? So like, for example, Karthik has built, this thing called as Varsity, which is our education initiative, completely MOOC initiative. There is you won't even see a Google AdWord. I mean, there is no ads on that. You'll not even see Zerodha on it. We don't capture email ID, mobile number into an email campaign. None of that. We do it completely as almost like a CSR initiative, almost like a give back to the society to teach them finance, right? And Varsity today is probably the second or third largest education initiative on capital markets in the world. And we have never spent a single rupee on Google, what do you call the search engine optimization. A lot of people keep asking me, who's your SEO expert? We haven't ever done any SEO, in the sense it's all organic. It's a very tough way to build a business, and if I think one of the reasons we were able to build this business was the fact that we didn't raise outside money, so we never chased growth as a business. Right? There was never a revenue target. There was never a user target for a year, because as soon as you have that revenue or user target, you are forced to advertise to get there quickly, right? And this, so we've always built this business saying, is this the right thing for the customer? Are we enjoying doing this? And thankfully for us, we got lucky, and the user growth happened. And but that's generally been the philosophy.
Fabulous. So it's let me do what I can, and they will come. That's pretty much what Mr. Nara often says. You build it and they will come. So I think it's quite similar in that sense, So interesting. But coming to your company culture, I understand, and you talked about your co-founder, and I understand you're very cohesive and close-knit this thing. So is there something that you do to build the culture, or is just again sort of evolved into some sort of this thing? Any thoughts as such as what you would call your company culture?
Yeah, so Sundar, firstly, this is very weird for both of us. We've done a couple of interviews on our own, but I think we're sitting next to each other and speaking for the first time. So
we're doing great. We're getting some lovely. I think.
Yeah. I think when it comes to company culture, I would say Nithin's being fairly modest. I think he has this uncanny ability to be able to inspire and motivate a lot of people. I barely ever say good things about him, so he's kind of surprised himself. And I think from the very beginning, him and everybody else who has worked with him in any capacity knows that he's a genuine guy who's looking out for the right interest of the people who work with him. And I think he has this, and Kailash, our CTO, also is a great proponent of this. And I think the culture that they have inculcated from the very beginning has continued as the company has scaled.
Yeah.
I think he's a bit taken back.
We are extremely we are usually playing some kind of a sport every evening. We're playing table tennis or pool or and stuff like that. So we're trying to but that was nice of him to say. No, but I think
you can't get over the shock, is it? I'm still reeling. Yeah, I know.
I think this whole not raising external capital meant that we had to build a business in a certain way, right? As in, so mostly people we hired we were almost their first job, and we couldn't really go to pedigree education. And I think both of us don't have any education, so I don't think we have ever given merit to saying is this a IIT, IIM, and all of that. It doesn't really matter. I think personally for me, it's always been, does the person have the right attitude to life, right? Which is a lot more important than whatever education he has, right? And he or she has. So a lot of people who joined us, we were their first jobs. The core team, the first 100 who joined us, hardly anyone has left us. I think one of the most spectacular things we've been able to do is Kailash in our tech team, which is like the heart of the business. no one has really left us. We've asked a couple of guys to leave, right? And I think, like, looking back, I think one of the reasons for that, of being able to keep people together. I mean, it's not even that we hired people, saying we'll give you stock options. I mean, not a single person in the company was hired saying we'll give stock option. Stock option was almost like a byproduct. We did well in the last 2-3 years. We said we need to distribute wealth now, right? And or it was never that anyone was hired getting paid more than what's the market. We were probably one of those guys who hired conservatively. So our pay packages when someone joined us wasn't too much. I think it's just a work culture which is not like, probably we are the only financial services firms in the country where not a single person on our team has a revenue target, right? Because I know that the fact that if you put a target, people go to extents to meet those targets, right? And in this business of money, you can potentially missell, you can do whatever, right? And for us, because we don't advertise, word of mouth is the most important thing. It means every customer for us who becomes a customer, we want him to go say good things about us, right? And I know that can't happen if one of our employees or whoever, right, ends up mis-selling some product to them, right? So it's a very laid back, Bangalore company. I mean, you come to our office, you won't feel like, you're really in office. I mean, if you go to Nikhil's room, he's usually got green tea on his face, so, and chilling out, while trading the markets, So it's, yeah, like I said, I don't know if you can copy paste this and build another business. I think looking back, one of the reasons it's all worked out well for us is because we've built a business around our core competency, right? Both of us, we've been in the markets, right? As in, we smell, breathe, whatever. As in, this is probably the only thing we guys have done in our lives. And when you build a business around a very that core competency, right? Your odds of things working out, whatever way you take it, right? I mean, we could have done the same business, raising money and done well, or and not raising, So that path doesn't matter, right? I think the fact that you're doing around core competency improves the odds of winning in life, which is probably like one takeaway a lot of people thinking of starting up should think about, which is you don't get up one day and suddenly say I want to run 100 meters at the Olympics, right? As in, you train for many years, right? As in, you need to sharpen the axe before you go cut a tree, right? As in, and which is yeah, I mean, which is what is worked. I mean, everything else the way we are, I mean, I think it's just it's just because we're building a business around core competency is what is helping all of this.
No, I think there's lots of learnings for the people, and we'll talk about that later. The fact that what we see 4-5 years is actually the result of 20 years of hard work to reach the last 4-5 years. The fact that, as you said, it is about the need, in a sense. You're not chasing, let's say, a target or a dollar or a revenue or something, but you're trying to put the best together, and that is something that is big. So it's almost like an uncompany to some extent, if I could call it that. So very interesting. I'm sure a lot of our people are really enjoying this. I'm going to ask one more question before I go to some audience questions. I'm a bit conscious of time. This question and is that about, so we have covered what you're doing right now a little bit more about your future plans. What are you thinking about? I know you talked about Rainmaker. You talked about the things you're thinking about. The Rainmaker, my mistake, sorry. But can you tell us a little bit about what you're thinking about what's next for you guys? Not to say that you're sort of slacking off anywhere, but what is you thinking?
No, I mean, see, one of the things I think Nikhil should probably talk about is so he started a hedge fund called True Beacon, which is our foray into asset management. Yeah, why don't you?
Yeah, so it's a asset management company. I don't want to break down all the details because it'll take too long. But think of it as a disruption in the asset management industry, wherein the asset manager is completely client aligned. The fund manager and the team only makes any kind of revenue when the end user makes any money or the client makes money. So we're trying to change that model because we noticed in the market for a long time people have had to pay fees on fees, even when they did make money and when they didn't make money. So it's a very efficient, a much leaner asset manager or a hedge fund than we had seen ourselves personally. And early days, it's been a year, and I think so far so good, and things are going well, and we'll figure out in time how it goes.
Yeah. So now that he said a good thing about me, I need to say some good things about me.
Yeah.
So, I mean, being modest, so the fund is is beaten the Nifty by 30% in the time period.
Wow.
Probably one of the best performing ones in the country right now.
Wow.
And so apart from that, the Rain Matter, the initiative, one of the things that both of us I think have realized is that because we've done so well, it's a responsibility on us to give back to the society. So we've also started this thing called as Rain Matter Climate, because climate change is something that we are extremely passionate about, and so we are investing into climate change startups. I mean, it's completely away from what we do as a business, but because we are so passionate about this, and I think the enabler for this is Kailash again, who's our CTO, which is I think I become so passionate because of him, and we are also supporting grassroots organizations who are kind of working on climate change, which is sustainable agriculture, and things like that. That's one piece. We've gotten an NBFC license, so we are starting a loan against securities business, which is customers who have securities with us. If they want to borrow money against it, they can actually borrow money at a much lower cost than what they can borrow otherwise. The reason, because you have a collateral. And in India, until now, the loan against securities business has been a very HNI kind of a product. A lot of people don't even know about it. Like, for example, if you have, say, ₹1,00,000 of mutual funds, you can borrow at, say, 11-12%, right? And you can clear your, say, a credit card outstanding at 40%, right? Because makes no sense to pay credit card or personal loans of 20%, 25% and over, right? So it becomes very tough to pay back a loan if it's anything more than 2% a month, right? So I mean, these are a couple of things on the business side, but otherwise, generally, we're super excited about our product itself. Until now, as a business, what we have solved for is to build the best platform in the country for someone who has an intent to trade. That means you know what to buy or sell. We will give you the best platform, or you want to learn what to buy or sell, which is where Varsity and all our education initiative comes into play. But what we really want to solve now is to kind of help a person buy sell better, right? Which is like what Nikhil said right earlier. There are a few basic rules that are required to be followed in the markets to do okay. I mean, forget the results, right? I mean, the idea here is not to focus on the result; it's the process, right? So, like he said, don't concentrate into a single stock, right? Which is don't put all your eggs in one basket. If you make losses, cut it fast, right? Or this whole thing called disposition effect, which is, people generally, if they have a stock which is making money and which is losing money, people don't sell what is losing money; they sell what is making money, right? It's a bias people have. So can you stop that from happening, right? The right strategy is to sell what is losing and double down on what's winning, right? Not the opposite, right?
Yeah.
And now the plan is, can you kind of build all of these as rules within our trading platform? So at least we can tell a person that when he's doing something which is breaking the rules, we tell him, boss, know what, you're breaking this rule. Not a smart thing to do, right? We've just incorporated one rule there, which is we call this engine as nudge. So if one of our customer buys a penny stock, right? Like penny stocks are essentially risky, worthless, scammy stocks, right? As in, ideally you should stay away from it. But greed typically ends up getting people to pick up penny stocks, right? Someone sends a SMS tip, or some money control said this stock can go from ₹1 to ₹10. People want to buy it. A lot of first-time investors don't even know what that stock is. So what we've done is we've now set that nudge filter on our platform. So if someone's trying to buy a penny stock, we scare the shit out of the customer, saying, dude, you can lose all your money if you kind of trade this. And if he wants to still proceed, kind of disregard the rule, we allow him to do it. But what we've done is we now ask customer to install a TOTP app and enter a TOTP and stuff like that. So we've slowed it down, and what we've seen is our penny stock trading volumes is down more than 50% from before we starting this to So I mean, there is hope that by putting these kind of things in the platform itself, we can maybe change the trading behavior of a customer, and that's the next big focus for us as a business.
But I think the retail investor in India is becoming smarter. at least in the last rally that we saw from 8,000 up until now, I think a lot of people came in and bought during the crash and have done fairly well in the last 4-5 months. So hopefully they continue to do well and the ecosystem grows exponentially.
Right. Great. So I'm going to a few audience questions. This is in fact related to what you're talking about. You talked about how you're trying to make trading better for the people who are in your platform, and you talked about how it's grown in the last so many years from regular traders on to some newer people. The question is from Anju, and she says the penetration of stock broking in India is still very low and is considered risky. How do you see it changing over the next few years? And what would you do to sort of, are you doing things to sort of make that happen more?
No, I think. See, a lot of people when they talk about penetration of capital markets, they end up looking at 130 crore Indian population, which is completely flawed, right? Because out of 130 crores, 80 crore Indians don't make enough money. So in the sense they're almost near the poverty line, so they can never invest, right? So really, your audience is the tax filing Indians, right? Which is 5 crores. Not even out of 5 crores, what 2-3 crores actually pay any taxes, right? So your really audience is 3 crores. I mean, the remaining 147 or 127 crores is not really your audience today, right? As in, it probably is your audience if they end up making money tomorrow, they come to the tax bracket, start paying taxes. Now, for a 3 to 5 crore kind of an audience, having say 60-70 lakhs per year invest in the market is not too bad. I mean, it's almost like a 15-20% penetration, right? A lot of people who want to go raise a lot of funds, they kind of tell the story that this is a 20-30 crore audience, but it isn't. It's a really small audience. I think the real problem in the country to solve is how do you get these people to move from the lower incomes to higher income, right? Once they're in higher incomes, then they make money, and then once they have money, they will find ways to invest, right? So yes, that I don't know if we can really solve the problem, but I think what India needs, I think, is I don't know if the broader audience that for not the first 1 to 2 crores, but the 2 to 5 crore audience is really ready for equity volatility. I think what they need probably is better fixed income products, which is better than fixed deposit products, and that's something that we've been working on with a couple of startups, saying, can you give them a little more money than what a bank fixed deposit does, right? Which is possible today, right? As in, like, corporates there are good corporates raising money at 8-9%, etc., and banks are not lending them. So if there's a way good corporates can come to the market and raise money from the retail, I think a finance minister has been talking about how the depth of the debt market has to increase in the country. Right? So that's I think that's really the only way you can grow the markets in India, which is by increasing the depth of the debt markets, which is because then people understand fixed income, right? It's a lot more easier to understand than understanding equity and its risks.
Great, thanks. Couple of questions on True Beacon. So I'm just going to take them both. Girish Joshi and Praveen and Siddhant Khemka. Would love to hear about True Beacon. Any plans to open True Beacon for the general public also, retail customers, etc., etc.? Maybe we could just talk a little about True Beacon and then,
Sure. So True Beacon does not have any statutory fees. So we don't have a model wherein we charge a certain amount as a fixed fee every year. So it becomes really hard to service the client who might be, just like 50,000 or 1 lakh in their account, because we will not be able to service them to the quality that we aspire to have with that much capital. So True Beacon as a company will be focused on the HNI and ultra HNI space. And the reason for this is just so that we can service our customers better. Because when you go lower down the chain, we will have to start charging fees if we have to, have somebody to talk to them, to answer their queries and stuff like that. And we can't afford it at that entry value.
Okay, thank you.
But that's it. We've also applied for an asset management license, which is to set up a mutual fund company. So whenever this COVID situation improves and we get our approvals, hopefully we will have a better mutual fund. I don't know what's a better mutual fund, but more efficient mutual fund in the country.
That's one question actually. One of the questions which says that, and the person has not left his name, how does Zerodha plan to disrupt the mutual fund industry? So if this happens, what are your thoughts and how can what can you offer which would be, say, more interesting than the existing mutual fund, what I call, offers at the moment?
Yeah. No, I mean, see, the thing is, no, if we are, we are working on towards it, and one of the way we have planned this is by partnering one of the startups of our Rain Matter ecosystem, who have the skill sets to, who build, passive products of sorts. The way we are looking at it is that, as, with time, it will become very tough for active managers, at least in the large cap fund space, to beat indices, right? Because the information asymmetry reduces, markets become more efficient, right? Now, if indices, if investing in an index is better than investing in a fund manager, why pay the fees, right? The fees differential itself could be the alpha, right? So I mean, the way we would look at it is build a passive only fund, and simplify it again, right? Because today I think the world of mutual funds is extremely complex, multi cap, large cap, small cap, hybrid. I mean, how does a 24-year-old who's just gotten a job, if you had to explain him what is hybrid, I mean, how do you do it, right? I think mutual funds in India has to be more goal focused, which is, I think Vanguard has done a brilliant job of it with their retirement funds, right? As in, you say you're just saving towards. I mean, everyone who's saving in a mutual fund is kind of saving towards a retirement, right? So you just give a year of retirement, and you use all these indices, passive products to get to that retirement goal. And I think what this country really needs is that, and not more complicated, more simplified products, because then you can kind of expand the markets as well.
Fabulous. I mean, I hope you get your what I call licenses fast and make some of this happen, because yeah, it's wonderful. So I'm now going to get back last couple of questions. I know we are pretty much on the time thing. Thank you for all the time you're giving us, Nikhil, Nithin. One question on a message for our, our younger audience, in a sense, so you have built a startup, as you mentioned, though it's been a longer journey than what it looks like, but it's still a very, very quick journey. So, what advice would you give to younger people, in a sense, who are thinking in terms of doing startup across various fields? It could be financial, it could be non-financial, whatever. Some thoughts you've already shared with us: core competency, the way to think, etc. But any broad thoughts, both of you separately, actually, will be interesting, because you get two perspectives on this question.
Why don't you go first?
Yeah, sure. So I think I'm skewed largely by, picking sectors and betting on companies for a long time now. So I would say, versus the problem you're trying to solve, it's also equally important to make sure the company you're trying to build is in the right sector, a sector which is growing, is maybe close to its inflection point. So picking which industry to start your company in is probably as important as the problem you're trying to solve. So that would be my suggestion. So pick the right industry which is set to grow exponentially.
Yeah. I mean, I probably have to little differ from his view, because that picking that industry is goddamn luck, right? I mean, if I knew how to pick the next industry that's going to have an inflection point, I would be, maybe that's the reason how he makes so much returns. Trading. No, but to be very honest, I think it's extremely tough to pick that sector, right? As in, how do you know what's gonna, at the end of the day, right? You have to realize that I think there are stuff which are in your control and stuff which aren't, right? As in, we got extremely lucky that the last 5 years played out well. I mean, there was almost like a mini bull market. So right place, right time matters, right? And it's probably the biggest. It's almost like the salt in your curry, right? I mean, you can do everything right, because if you don't get the right place, right time, it's not going to work out, right? So I think personally, my advice, apart from that whole core competency thing, where improves your odds significantly, I think it's about once you know that it isn't working out, get out of it. I mean, it doesn't. You don't have to be that hero who's swimming till he drowns, right? As in, because what happens is, once you're caught in an idea, you end up missing out a lot of other opportunities, right? And that opportunity cost is a lot bigger, than because people, what I've seen generally, a lot of people who start up is, we all have egos, right? We don't want to be said you're wrong, right? And that is a problem, right? So my advice would be that if you can't get 1,000 people to love your product, I mean, of course, you have to MVP and build a product. I mean, if you can't get 100 to 1,000 people who love your product, they're talking about you, and business is coming to you organically, maybe you're not meant to do this. Maybe it's a good idea to go and do something else, or at least be in that phase where you can at least spot an opportunity. Otherwise, if say we were doing broking and we were say struggling for 10 years, and today there's say an amazing opportunity of asset management, we couldn't even spot it and go work on it because you're stuck in this idea, right? It's I don't okay, I don't want to use an analogy. I was trying to come up with an analogy which might sound a little off.
The point is,
if you're almost like being married to the wrong person, right? You
have the wrong brother, no?
And so it's important to get away from it so you can otherwise it's just gonna keep deteriorating with time. So yes, it's I think that'd be my advice. Don't if something's not working out, get out of it fast. Because there are many opportunities, like Nikhil said, there are many industries that are going to hit their inflection points, and every startup, building a business is amazing skills, right? You learn all type of skills, right? So you become, your axe gets a lot more sharper, when you go to the next problem that you want to solve for.
Fabulous! It's very exciting to think about. I'm sure many of our potential, people are thinking of this will get very excited and hopefully do a lot of very interesting things. I think that, as you said, there's so much opportunity right now, in spite of our COVID times or whatever, that hopefully next few years will be really interesting times. Now I have a few rapid fire questions, and this is particularly because the two of you are there, so I thought we can have some fun. So first, again, both of you will answer because So out of the two of you, who gets worked up easily and who's calmer? First. No, both of you can answer.
Yeah, no, I mean, see, the thing is, he's calm, but he keeps it all together. I am calm. I let it out, and then I'm calm. So I don't know what's the better thing to be, but I think he's calmer because he never reacts. I at least react once in a while.
So you're saying you bottle it up, and he's okay. Do you fight with one another?
Not really.
In terms of work-wise, no.
I mean, see, the thing is, work-wise, we both do different things, right? As in, I've not placed a single trade from when Zerodha started, because and so we never talk business really.
I think we get most competitive when we're playing a game.
Yeah, I mean, no, you put us in a game, anything, right? Chess, table tennis, whatever. So that's when we almost fight, but not really fight, but we're very extremely competitive.
So are you guys both competitive? I mean,
he is more competitive than I. So he's the kind of guy. Well, we were playing badminton recently, and I have like this 22-year-old friend of mine who he lost a game to. So I know for a fact he went home and sulked. And maybe practiced or looked up online how to get better at badminton.
See, these things you left out when you talked about your company Rise. So some of this, very nice, very.
I mean, the thing is, we're competitive, right? But then I don't think we are the kinds who we're not aggressive competitive. You know what I mean? There are people who are competitive and they think you need to be cutthroat to be competitive. It is not. I mean, you can be having fun and being competitive, right? Which is you're enjoying that whole competitiveness. It's I wouldn't I've never thought of hurting my competition as a broker, right? I mean, I always try to help our competition as a brokerage firm, and but we're still more competitive than what a lot of our cutthroat competition is. So.
Yeah, no, absolutely. As you say, competition not necessarily going at each other's throats. It's about a state of mind, I'd say, right? One great quality that you like about him and that you like about him. I'm also going to do the reverse, so be careful.
Okay, so we're starting with good ones.
Yes.
No. I mean, I think with him, I don't know. He's really stoic. In the sense, I don't even know how it's possible to remain calm. See, I think trading the markets is like I keep saying this. It's probably the toughest way to make easy money in the world. Like a lot of people come to the market saying it's easy money, but it is really the toughest place. So every day his P&L could be, it could be like crazy, right? As in, it could be up in the morning, it could be down in the afternoon, it could be up. Just the emotional roller coaster that you go through in a day is extremely crazy as a trader, because I know it because I've traded for a while, and he's now probably trading at 500 times the scale at which I used to trade back, back
Wow.
2000s, right? So yeah, so I don't know how he manages to remain sane and keep doing it day in and day out. And you need to be born a certain way. I mean, it's some genetic lottery that he's hit, So, but I think him being that stoic and see, the thing is, to trade and make money, I think one of the keys is that not panicking, not reacting, just being able to remain rational and sane, even when you're kind of shit hits the fan types, So. And I think that's what he is. So which is what has helped him and the business as well.
Works well professionally. I don't know how much personally. I think one great quality about Nithin is he's very genuine. I think everybody from the people who joined us 10 years ago to the team that we have today, there are a lot of companies which pretend to care for the people they have as colleagues or the people who work at the company. But I think he genuinely cares, and he is happiest when they do better in life one way or another. And I think that is rare today. So, I mean, there are some other good qualities, not many, a couple, but I think this one kind of takes
It's a big one.
Takes a higher spot in that order. Yeah.
Wonderful, lovely, and very interesting. So now we are going to the other one. What is it about him that you negative quality and vice versa?
Yeah. So it's actually his biggest strength is probably his also biggest weakness, right? While it is very good at work, I think in personal relationships it isn't, right? Because you can't just keep taking, in a relationship you can't keep taking it in and not reacting, right? Because it doesn't work like that, right? As in relationship, you're supposed to show your emotions, get it out of the system and all of that, and that's probably his weakness as well.
Yeah, I would say the same for him. Not because I think what I mentioned as his strength is also his weakness, because when you treat so many people as family, there might be some people who can take you for granted a little bit and push the line beyond it should be pushed. And I think with a certain amount of success in life, you kind of have many more people who would want to take advantage of that place or take that opportunity. And I don't know if it happens or not, but I can perceive it happening at some level at some point.
Yeah. Great. The last question: which is your favorite sport and why? Both of you.
Right. No. For me, it's basketball, because I like my sport to be physical. Because the thing is, I think for me the toughest problem I've had is to just switch off, and because I'm constantly thinking something, right? So I mean, so both of us play all types of sports. So I think I'm sure it's for him as well, which is I think when you're playing a sport is when you completely switch off, as in especially a physical sport, a badminton, not a cricket, not pool or something, right? Because there you can still sit and think, But I think a physical sport and basketball is generally shorter games, so you don't have to spend too much time in a day for playing basketball. So I think it's all together, But yeah, for me, basketball.
I'll give you a rating. He's much better than I at basketball, at badminton, at table tennis. We are, I think, equally matched. We only started playing properly like a fortnight ago or something like that.
He may be taking classes,
Huh? I have.
He may be taking classes,
But I think pool, I'm better than him. Chess, I'm better than him. What other sport do we play? Yeah, I think that's about it.
No, I mean, once in a while, allow him to kind of beat me at a certain sports. So, you don't want to be that guy, who beats you all the time.
So we tend to play the sports he's better at a lot more than the sports he's bad at. So if he's losing in a certain game, he'll just pick another game. Let's play basketball and not play pool anymore.
So, and do you think sport is relevant to business success or business in sense? What would your advice be to younger people? Should they be playing sports?
No, I mean, I think it's about switching off is extremely important, and I mean, I don't know if it's. I think staying fit is super important because this at the end of the day, right? Businesses are competitive, right? As in I as a founder of say both of us, we are actually companies as a trader fighting with someone else, and I as a CEO fighting with someone else. Eventually, right? And I think how fit you are means how much more you can give to the business, right? And there's so many people who don't agree to it, but as a fit person, you can actually do a lot more than an unfit person, right? And so if I think people should pick up a sport because it's a fun way to remain fit, right? And also because it helps you switch off, which is very important, especially when you're running a business to just take that break, and I know a lot of entrepreneur friends. I think the biggest problem everyone has is just to switch off, right? And sports helps you do it. So I would definitely advise people to go play a sport.
Nikhil?
Same question to me.
But I'm assuming the answer is similar. Do you have any other thoughts on this?
I would totally agree. Second, what he said and say sport is important. I think for more reasons than just being physically fit, I think it inculcates some level of a competitive spirit and also teaches you how to work in a team. And I think that's very important when companies scale and become larger teams.
Oh my God, that was like a Miss India answer.
Yeah.
Anyway, but thank you so much. I think we are sort of at the end of this, and I've taken up the entire hour, but thank you for the time. It was absolutely wonderful talking to the two of you. So many interesting thoughts and insights. And truly, this hour has given me at least the sense as to it's how Zerodha is where it is. It is not just happenstance, just not that you just did something. There is a lot of things that have gone behind, and you gave us some of those insights today. But thank you so much. It's been a real pleasure to talk to the two of you.
Thanks. Thanks. Cheers. Bye.
Cheers. Bye.